Hello, and thank you for joining us on this podcast. You will be listening in on a conversation between Brannon Poe and Ed Mendlowitz about gearing up for tax season. You'll hear some great tips for developing smoother and more profitable tax seasons. Brannon Poe is the founder of Poe Group Advisors, a leading-edge intermediary focusing exclusively on accounting practice sales, mergers, and acquisitions. Brannon is the author of Accountant's Flight Plan, Best Practices for Today's Firms, and On Your Own, How to Start Your Own CPA Firm. Ed Mendlowitz has over 40 years of public accounting experience and is a partner with Withum, Smith & Brown in New Brunswick, New Jersey. He has written 16 books, including Managing Your Tax Season, Successful Tax Planning, and How to Review Tax Returns. Ed has also written hundreds of articles for business and professional journals. To learn more about Poe Group Advisors, please visit PoeGroupAdvisors.com. To learn more about Ed Mendlowitz, please visit Withum.com.
Hello, today I'm talking with Ed Mendlowitz. He is a partner with Withum, Smith & Brown. Ed is one of Accounting Today's 100 most influential people. He's also the author of 24 professional books, including a bestseller, Managing Your Tax Season. His practice management techniques have been reported on in the Wall Street Journal, the Journal of Accountancy, and Accountancy Today, as well as many other publications. Ed, thank you very much for being with us today.
It's a pleasure, Brannon.
So today, I saw one of your articles, which is how I came to find your content, and you wrote a book called Managing Your Tax Season, and I thought that would be a timely topic for our audience. So I've got some questions just about the book. My first question is why write a book about a subject that everybody knows about and deals with for a substantial part of their time?
Well, actually, that's a good reason to write a book. Everybody spends a lot of time with tax season. I know of very few accountants that are really happy with every aspect of tax season. I'm one of them that is very happy. But very few accountants are happy with all the aspects. Even if they're happy, there's parts they don't like. So what this book does is brings together all the facets of tax season, puts it all together, it sort of integrates it, and it shows how you could have a better tax season, more profitable tax season, service your clients better, and have staff that really have a lot of fun, and how you can make more money.
Yeah, well, that's the whole point, right?
That's right.
So who do you think is the primary reader of your book? Who's the target reader?
Well, actually, I started out giving a speech, Managing a Tax Season, 35 years ago. And I've given this speech over 60 times. And believe it or not, I used to give it twice a year for quite a few years for the New Jersey Society of CPAs. And the same people would come to both presentations each year, and I would tell them, why do you come? It's the same. And
Yeah.
they would tell me that they get idea, every time that they hear it, they get a different idea. And literally, they want to run their practices better, and they feel this is a good way of starting with tax season.
So are you finding that it's smaller practitioners or larger firms? What's sort of the typical reader of your book or the typical person that would come to your speeches?
Well, I tell the readers they could write to me, and I would send them stuff. And basically, almost everybody that responds, I would say from firms that are from sole practitioners up to about 30 or 40 people. Occasionally, someone from one of the really giant firms, contacts me, and because in a way they run a mini tax season even for their own book of business. You could be with one of the big four firms, and you still got a responsibility for your own book of business. But my reader is and my audience is the smaller practitioner. Okay. It's a way of supporting smaller practices, and I like to do it, and my firm likes to do it.
Right, and that's our typical audience too. Is probably the smaller firms. And one thing I hear from people more and more, and we see this in our business, is like we're sort of in the middle of our busy season. So after October 15th up until February, we're pretty busy selling practices. But one thing you write about is sort of a 12-month tax season. Do you see any big difference between, the April 15th tax season and now the October 15th tax season?
Actually, there's a big difference, but there is a 12-month tax season because of extensions, things stretch out to October 15th, and then right after October 15th, we start doing projections and year-end planning for our clients. And also we got to start planning for the next tax season. So it really is a 12-month tax season, but there's a big difference between the April 15 tax season and the October 15 tax season. And the big difference is that for the April 15 tax season, we could have staff work late, work all hours of the night, and not have a problem. And their families seem to understand it. They may not like every bit of it, but they understand it. You can't tell somebody that they have to work late in September or the beginning of October. And if you want to stretch out the work into the summer, it's very hard to tell somebody you got to work late in August. So the difference is that there's a resistance to getting the unlimited amount of time that we seem to get during tax season. So to me, that's the difference. The other thing is the October 15 tax season, everything seems to be a rush. The April 15th is a rush because we have the deadline, but it's an orderly rush. People bring in their information, and we have time to get the work done. On the October 15 tax season, we may not get we were getting K-1s a couple of days before October 15th.
Yeah.
It's crazy. And again, the hours that you're forced to work, normally you don't work the extra hours, but you work the extra hours on tax returns, but you take it away from regular work. In the April 15th tax season, you don't really take that much away from the regular work. It's more orderly, believe it or not.
Yeah. So what do you do to counter that? What are some of the strategies or solutions you found to help with that, making that October 15th deadline less of a problem?
Well, part of it is to schedule the work that you can do. I would say that we have the extensions we have on April 15th don't get touched until June because we're recovering and we got to catch up on regular work. I would say most of the work that gets done at the last minute in October can be scheduled in the summer, in June, July, August, and even the beginning of September. So it's fill-in work, but you can schedule it, get as much done as possible, and if you're waiting for K-1s, get everything done except for the information that go from the K-1. But it's a question of scheduling, and I talk to accountants all over the country, and we just don't do it right. We don't schedule it. We don't feel a sense of urgency, and it's the summer. People really take off a lot. If you go on vacation, I think at any given week you got 15 to 20% of your staff is on vacation during the summer. So while summer might seem it's not as busy, it is because we're shorthanded. But I would schedule the work as much as possible during the summer. The other thing I try to do is I try to get everything done before April 15th that we can get done. There's two types of extensions. There's the extension that is dictated because the client doesn't give us the information or the client doesn't have the information. And then it's the work that we feel we can't get to or returns are too complicated. We don't want to rush it. I would kill to get every return done by April 15th.
Right.
Get it done because if you don't get it done by April 15th, you're going to have that rush in October.
Right. Now, one thing you mentioned in the book or you talk about is outsourcing. So what do you think about outsourcing return preparation? Well,
if you can get it done by outsourcing, I would recommend it. However, there are people who tell me they will never outsource a return no matter what, and then they have their staff work at home, good part of tax season. Well, when the staff works at home, you've outsourced it to your staff who just happen to be working at home. Outsourcing means it's not done in your office. So there is outsourcing. Now, if you want to hire a professional organization or a firm to do the returns, I have been, me and my partners have been very successful outsourcing returns in bulk to other organizations that just do tax returns. It's a crunch. We got a lot of work to do. You could outsource a lot of the detail. Also, part of outsourcing is using these smart scanners. People don't look at outsourcing in the real sense of the way. Outsourcing would be any work that could be done that's not done by the people sitting in your office. If you have smart scanners, if you could scan the 1099s, W-2s, and a lot of the simple K-1s, that populates the tax software. That's a form of outsourcing. Also, you could hire. There's a lot of people who are very competent, like maybe a lot of stay-at-home moms who want to get out of the house during tax season, and you could hire them on a part-time basis. That they're not going to give you all the hours that you might want, but they could be very effective doing tax returns partially in your office and partially at home. We're paperless now. Everybody's paperless. There's no reason why you can't have flexible time and have people on a part-time basis that are not regularly employed by you doing tax returns during tax season.
Yeah, and I've seen a couple of firms successfully let students do really simple returns, and that's a really low-cost way to get tax return help. And you've got to have a training program in place, and you've got to have enough volume for that to make sense. But that's another option that I've seen a couple of firms do, and it's very profitable.
Our firm hires interns during tax season. My office alone, we hire about 5 or 6 interns during tax season. We have a very good, excellent training program, and we could get students doing 80 to 85% of the tax return, and that relieves a tremendous amount of pressure. Also, I don't care who's listening to this or what size firm they are. In most of the large firms, it's lower-level staff that do the tax returns. You don't have people with 8-9 years experience doing tax returns. You have people with 1 and 2 years experience doing tax returns. It's reviewed by higher-level people, but you are having lower-level people do the tax returns because most of the work can be done by these people. Again, training is a major factor. I look at training as an investment, and it has to be done, and I think that the training has to be done, a good part of it has to be in-house based on the systems that the firm follows.
Right.
I mean, everybody is going to know what the tax rules are and what the deductions are, but the procedures, the way returns get done, the way it's approached, the way people start, the way they follow up with clients, the training should be on those kind of things.
Yeah. Do you know anybody that's published a really good intern or student training program? Do you know if any publications are out there that exist for that?
No, actually I don't. That's a good idea, but the firms that do the training are not going to buy it, and the firms that don't do the training don't have a clue, and they keep complaining about the quality, and they don't do anything. There are, my book, Managing Tax Season, I don't want to give a plug, but it's an excellent book. I have another book called How to Review Tax Returns, which is for reviewers, because there's nothing except for my book on how to review tax return. But the training, the basic training for doing a tax return, we're very successful doing it in-house. We're a pretty big firm. We have many different offices, and in each office, we've developed their own training method, and it works. And when I had my own firm, I merged in 11 years ago with a larger firm. But when I had my own firm, we would hire people beginning of tax season, or even in the beginning of February, and by the beginning of April, they were working on some of the most complicated returns that we had. It's all in the training. You need a discipline, you need a protocol, you need a way of doing it, and you need a mindset that you're not going to shortcut any of the training.
Yeah, I think there's a real demand for that type of training. If you develop some kind of program that's tried and true, I bet people would benefit from that. Now, some people call you the checklist man. What? Why do you feel checklists are so important?
First of all, I love checklists. I have checklists for everything. If I go on a trip, I have a checklist when I pack. And if I go on the trip and I need my tuxedo, I have a checklist of what I have to pack for the tuxedo. In any kind of business, and we're in the accounting business, the way you make money is by leveraging the talent and the ability of the higher level people and getting lower level people and entry level people to do the work and to follow the systems and procedures. The only way you could have effective systems and procedures that people could follow is to have checklists.
Yeah.
So I think that there should be checklists for anything that's repetitive in an office. I will tell you, I'll make an offer. If anybody, I'll send to you, I give out, every year I publish tax season checklists. It's about 35 checklists. I update them every January. And I offer them for free. So I could send them to you, Brandon, in January, and you could send it to your readers if you want for free.
Yeah, we'll put a link. Is there a link, like they could just link to it? And
No, but if people email me, I'll send it to them.
Okay.
So they can email me, and don't do it before January, but if they email, I'll have it ready usually about the third week in January. I update them all. There's about at least 35 checklists, and then some other goodies. And everything that I post and publish, I've done. So if I've done it more than once, if I'm doing something for a third time, I make up a checklist at that time.
Yeah,
if I do it once, I'm not going to do a checklist.
Yeah.
But the second time maybe, but for the third time, I'm absolutely going to have a checklist. Because why repeat? Why keep learning something that you know?
Right. No, I agree. And one thing too that you mentioned in your book is you advocate that reviewers eliminate checking all the input and stick to issues and big picture review. So with that, how can that be effective if the input of the client's data is not checked for accuracy?
Well, I've done surveys, and when I give a webinar on how to review tax returns, and as many as most firms have a lot of firms have as many of 80 and 90% of the returns that are handed into a reviewer are wrong. So the quality has to be improved at the preparer level. That, to me, is a must. And if the preparers did their job right, then the reviewer, there's no need for the reviewer to check every item of input that the reviewer did, that the preparer did. Now, I got to tell you, if the reviewer, you look at a tax office, you have one of the highest level tax people does the review, and then you have a bunch of lower level people preparing the return. So you might have 4 or 5 people preparing returns, and it goes to one reviewer. Physically, the reviewer can't really do an effective job rechecking all the work that everybody did. And if they do an effective job rechecking all that work, they're not reviewing the return, looking for tax planning opportunities, tax saving opportunities, and looking for red flags that might cause an audit. I call it reviewer fatigue. Also, if a lot of firms cut out, if they improve the quality of the preparer and really had a zero tolerance for errors, I think a lot of overtime would be eliminated. Because a lot of the work that's done during tax season is done twice.
Yeah.
Done by the preparer, the reviewer spends extra time finding errors, and then it goes back to the preparer to fix, and it goes back to the reviewer. The other thing is, ticking and tying is designed to find an error in the input. So I'll give you an example. If the preparer left off mortgage interest, the reviewer would find it. That's what ticking and tying does. Now, if that error is made and the return goes out to the client with that error, someone's going to find it. The client's probably going to find it. It's going to be very embarrassing and very uncomfortable for the accountant, but it's going to be corrected and there's no harm to the client. On the other hand, if the client has freelance income and could have had a SEP, which could have been a retirement plan that could have reduced some of his taxable income, the reviewer is not finding that or not looking at it for that because he's too or she's too busy checking the input. So the input is checking the input is not going to make the client richer, but looking for the planning opportunities will make the client richer. If it doesn't make them richer for the return that you're working on for the previous year, you could do the planning for the current year. Tell the client they can have a one-person 401k plan instead of a SEP. This way they could put as much as 100% of some of their freelance income. So it's the way we look at the reviewer and the way we look at the review function. The reviewer is really quality control of a tax return. And when you have any business that's quality control, they sample the work. They don't recheck all the work that everybody does. So I think the emphasis is totally wrong. And I have a book on this, and that's why the book has been a bestseller by far. And I've been doing a series of webinars on it, and they all seem to be sold out.
That's great.
People are not reviewing returns properly.
Yeah, I remember I started my career on the audit side and also did reviews. And I always often thought that a review in terms of financial statement was probably, you catch more doing review than you do an audit because you're so busy. You're in the weeds when you're doing an audit. Now, obviously, you have reviewers that are supposed to keep you, do that big picture review. But in some ways, I always thought a review engagement would probably have a better chance at catching something big than an audit would.
You mean a review engagement for a financial statement?
Right, exactly.
Okay, well, okay.
For that same concept, if you're ticking and tying, there's not a whole lot of value in that.
There's no value in ticking and tying other than to catch a careless error that was made by somebody. But these errors get corrected, and there's no harm to the client. But an error of omission that could have been done. I'll give you another example. A client gives large amounts of money to charity, and they have large capital gains. Well, this has nothing to do with last year's tax return, but a reviewer should make a note for a planning opportunity that maybe that client, instead of selling the stock for the current year, could donate it to the charity and get a tax deduction, the same tax deduction, but not have to recognize the income. We're not having our reviewers find those things. And to me, we're being paid, a professional is being paid to do the planning, not to make sure the input's 100% right. It should be right, but we have to make it right at the lowest level in the firm, not at the highest level where the reviewer finds the error, and then in a lot of firms the reviewer corrects the error, which is totally stupid. Now, there's a lot of people that listen to me and they think I'm crazy, because 30 years ago they were doing it a certain way, and it shouldn't change. And these are the people that complain every year about the time crunch, about the quality, about running out of time, about the overtime, and not having enough input from everybody. It has to do with the training.
Right. Now let's talk about, this ties directly into a lot of the things that we preach is about pricing. You suggest that bills are sent with return. So how do people, if people are really into reviewing time records, how can they do the bill with the return?
Okay. I think that people lose track of something. We're in a business. We're not. This is not a hobby, and we're not in a business where we physically sell time. We may think we sell time, but the client buys a product. They buy an end product. most tax returns have some sort of fixed fee to it, even if you're on a time basis. Even if you do it on a time basis, somehow the fee's about the same every year. If there's no major changes to the return, the accountant should know what the fee was last year and what they could charge this year. If there's extras on the return, then the accountant should look at the extras, see what caused extra time, and then assign a value to it and bill it that way. And they should put the bill with the return. The longer it takes for the bill to be sent to the client, the longer you're going to get paid, and the less likelihood you're going to get paid 100% of what you bill.
Yeah.
Now, I say the bill should be sent with the return. They should be sent no later than with the return. I know a lot of accountants now, they tell the client when they drop off the work how much it's going to be, and they get paid at that time.
Yeah.
Or they get credit card authorization, and then they charge it when the return is finished. We got to get paid, and we got to charge the right fee. And what we think, I'll give an example. We could do an net operating loss deduction on the return, and we could get the client a substantial amount of money, a substantial refund, and it could take literally 40 minutes. So if your billing rate's $300 and it takes 40 minutes, you're going to charge $200. Well, what's wrong with if the client's getting a $30,000 refund? What's wrong with telling the client there's an extra charge of $2,000 or $1,500 for the refund claim? If we did the client's if we did 2 of the client's children's tax returns who went to college and had summer jobs and had W-2s from 3 different states, and it literally cost us $400 to do that tax return, we're not going to bill the client $400 for each return. We're going to bill a nominal amount. So if we're going to write down work that we perceive doesn't have a value to the client, why shouldn't we write up work that has a value to the client?
Yeah, I'm totally in agreement with you. I'm a big proponent of value pricing, and I couldn't agree more. And I think clients, the simpler you can keep it for clients, they don't need to know how much time you have in the job. Most of them don't care. They care that they're getting a reliable product, like you said, and good service. And if you do those things, then you should be paid, and you should be paid in a timely fashion. Now, your book gives 10 reasons why a client should use. You should have. I guess you're saying you should have a list of 10 reasons why someone should use you for tax preparation. Could you share a few of those?
Well, I give 10 reasons, and it's in one of my checklists. But a lot of us fail to understand that we're in business. Clients must have somebody do their tax return, but it doesn't have to be us. So and on some level, to the client, the output, the physical product is the same. So what do we do to differentiate ourselves from other people? One of the biggest reasons that people should use us is that we're available. We're going to be there for them if they have a problem. Another reason is that we really have a database of them, and we maintain a database of their situation. And if they have a new situation that arises, we can factor in their personal situation and make sure that anything new that they do they're going to maximize their tax benefits from what they do. We're not here, during tax season. We're here 24 hours a day, 365 days a year. We're there for them. We will return their calls promptly, and we treat what they do. We treat the work we do for them with the care that they ascribe to it. When they get their tax return, it's the single most important thing in their lives at that moment. They're not thinking, gee, I'm paying $300 extra. They're thinking, is this right? Is it going to get me in trouble? Did they pick up everything they should have? and we treat it with that same care. So, we're in a sense, the continuity has a tremendous value for the client.
Sure.
And we show it to them in terms of money, in terms of the value that they perceive.
Right. So I'm going to start to kind of wrap up. I got one more question to present to you. What's the number one takeaway you want to leave us with today, Ed?
That's a good question. Basically, we're in a business, and everybody that's listening to this podcast has a system for their practice. They all have a system. Some systems stink, and some systems are tremendous, but everybody has a system. So you have to recognize you have a system, and then you have to try to make it the system that you want, and the system that's going to reflect the reality of the way you want to run your practice, run your office, and run tax season. So the number one takeaway is you recognize you have a system, and then work on it to make it as good as you can make it.
That sounds like an excellent plan, and we really appreciate you sharing all this with us. And I think people really might want to get some of this checklist, so we'll leave the email address.
If they email me, they said they heard the podcast, they email me, I will send them the checklist. Give me a few days, but I'll send them the checklist as of now, and I'll put them on my list, and I'll send them the checklist when they come out in January.
Excellent. Well, thank you very much, Ed.
Thank you, Brandon. Nice talking to you.
Thank you for listening in on this podcast. If you would like to contact Ed, please email him at emendlowitz@witham.com. Ed also blogs at partners-network.com. If you would like to contact Poe Group Advisors about buying or selling a practice, you can email them at info@poegroupadvisors.com or by phone at 888-246-0974. Brandon's website and blog are located at poegroupadvisors.com.